So our next question comes from Rita J on Instagram. Rita says, "Hi guys. First of all, I love your podcast. Please keep going. You have my 5-star rating. Here's my question. I have a brokerage account, but I'm hesitant on depositing into it consistently as I'm limited due to my husband's working for a Big Four company. I don't feel as though I'm making as much money as I could because of their restrictions. Should I continue putting money into this brokerage account, or are there other options that I should be exploring? Thanks in advance." So just to set the table here, Rita J, your husband works for a Big Four accounting consulting firm. So that's Deloitte, PwC, Ernst & Young, or KPMG. And they've got some very interesting rules as it relates to buying and selling stocks. So because you work at a firm that does the accounting, auditing, and consulting for pretty much every publicly traded company in the United States, you have some insider information as to what their numbers might look like or their biggest strategy updates might look like. And you get this information in real time as you're auditing ahead of these earnings calls. And so the reason why they have these restrictions there for you is so you don't trade upon some information that you might have got from your husband who was working there, right? So here's the deal. That is correct. You've got some crazy compliance restrictions on your account because of what your husband does. There are 3 solutions to this. The first solution is a completely different asset class altogether. Maybe you want to invest into real estate. Real estate has nothing to do with accounting and audit and consulting and whatever else is going on with these Big Four firms. So if you wanted to start a real estate portfolio, you could do that by buying a duplex or a quadplex with this 5% Fannie Mae mortgage and begin to become a real estate investor and build your wealth that way. The second way, if you really do want to invest, is to just buy these well-diversified index funds and ETFs like the S&P 500 or the NASDAQ 100. These are pretty much the easiest way to get around, in my humble opinion, any of these like single stock compliance, because you're not buying a single stock, you're just investing into American capitalism, and there's nothing wrong with that. The last way to get around this is to have someone else manage your account. Maybe you've got a managed account through Fidelity or use a robo-advisor like Betterment or Wealthfront. I would actually encourage you to do that because their fees are much lower, but you just give it your risk tolerance, sort of what your investment horizon is, maybe other ideas and things that you have a liking to as it relates to themes or different types of sectors of the market, and they will build a portfolio for you. It's completely hands-off. You don't make any of the decisions. Therefore, there's no reason, in my opinion, for your compliance team to push back on that because, again, you're not the one making the decisions. A financial advisor is doing that for you. So to recap, you can just switch to real estate and just do that your whole life, which is pretty limiting. Or you can just buy index funds and ETFs, which I don't think their compliance team would have any issues with. Or someone else can go build a curated portfolio for you that will include some cool single stocks and sectors. But because someone else is building it for you, you don't have much compliance to worry about over there.
I love that breakdown. And the only thing I would add is they could look at precious metals. There's a world where they could make really good money right now. Gold and silver have been doing really, really well, outperforming the S&P 500. And then also cryptocurrency. They could have a small portion. I would think that most of the cryptocurrencies would be within compliance to be able to have a portfolio through public.com of cryptocurrency. That could also be an alternative for them to flush out and make sure works so they can stay in compliance, but still be fully diversified in other sectors that could help them build the wealth along the way.
The most important thing to remember here, though, is that you guys got the hard part of wealth building out of the way, which is a wonderful income. If your husband is working for one of these companies, chances are he's making hundreds of thousands of dollars a year, and your household income is very big. And it's very important now to make sure that you are not letting lifestyle creep get in the way. You guys might live in a big city like a Boston or a Chicago or a New York, and maybe, time to upgrade the apartment, upgrade the home, get the kids in a different school system. Make sure you keep your eye on the prize, which is a wonderful retirement, right? That is the goal. And by working with a robo-advisor, having some precious metals, maybe some cryptocurrency, you should be able to achieve that pretty easily.